Well, let's talk about the most advantageous market. What do we see here? This is our last type of question we'll see here. When we're trying to value something and we don't necessarily know what market to use, right? Yes, I can look on the New York Stock Exchange and see that a share of Apple is trading for $100. However, what if we're talking about like corn or soybeans or wheat or an item like that? We've got different markets for selling these goods. Well, we're going to use the most advantageous market, and I will show you an example of what that is. So there'll be questions in the exam that ask which is the most advantageous market. This will be the market with the best price for the asset, so that maximizes the asset selling price, so you want to sell it for the most, or liability, minimizes payment to transfer liability. So the best net value, right? So I want to be able to sell my asset for the most with the minimal selling costs. While anti-transaction costs are used to determine the most advantageous market, transaction costs are not included in the final fair value measurement. We'll see what that means. We only use the most advantageous market if the question states that there is no principal market. So the question says that, oh yeah, sure, the principal market is the New York Stock Exchange. Well, we're not going to use this, right? We're not going to use the most advantageous market process. All right, now let's see what we all meant and finish up with a nice question. Okay, Harold Company holds stock in Sam Inc., which is traded on two different exchanges. So Sam sounds like a smaller company. It's traded on two different exchanges. Harold can access both the California and Paris markets to buy or sell the stock. The stock price and transaction costs are at the measurement date are as follows. So under the California exchange, the stock price is $104. However, transaction costs are $12, and this is the net amount, right? Like you could calculate this yourself. It might not be given. You might have to do that. So how do we determine which the most advantageous market is? Okay, well, we are going to use right here, we are going to use the net amount. So net, we are going to get the most from Paris, right? Because net gives you $96 per share. So yes, California says they're going to give you 104, but the transaction costs are $12. Leave it to California being expensive. So now we know the most advantageous market is California. Pardon me, Paris, not California. With that being said, then, if the actual dollar amount is not going to be 96, from there, the question, if it says, what is the value in the most advantageous market? Step one is find the net amount and decide there. Then we use simply just the quoted stock price, just the actual revenue amount, right? So there we go. And let's just say, like here, let's say California was the most advantageous. We would use this net to determine it, then cross that out, and we'd use this as the actual value of the stock. So just two steps, right? That's just the whole process. Step one, use the net amount to determine which one we use. Step two is we then simply just use the actual sale price.